Silver, they're not bullish out of the gate. You may be, I may be, but they think, and this is comfortable to hear this, they think that silver gets going when base metals bottom.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. Today's market rundown. We'll be going through CPI, which will probably be out by the time you see this. And we're going to go through its annual report time. And one of our favorites is out, and that's MUFG. They're a new favorite. From 2024, they had a really impressive report, and it turned out to be right in almost every category. And so they're back for 2025, and we're going to give you a little preview of that with the full report in premium. A couple slides as well. All right, so let's start with the markets. The dollar is up 23, 106.63. 10-year yields are 424, up 1 to 2 basis points. S&P 500 is 60.43, up a tenth of a handle. The VIX is 1430, up 11. Gold is 26.97, up $3. Silver is 31.67, down 18 cents. Copper is 421, unchanged. Offered. WTI 69.47, up 90 cents. Natural gas is 315, up 11 cents. Bitcoin is 98,300, I should say, up 1,670. So between 95 and 100 now. That's usually an accumulation pattern for them. Ethereum is 37.23. A lot of selling yesterday, also a lot of buying of the dip by BlackRock, spoofing lower, accumulated by big players. Palladium is 9.55, down 19. Platinum is 9.34, down 6. Gold, silver is pretty strong. Grains are mixed. Soy is down 4, and corn and wheat are up a little bit. All right, where was I? All right, MUFG's Commodity 2025 predictions. There you have it. Front page. Making sense of Syria. CPI preview that went out this morning to premium subscribers at about, 6:55, 7 o'clock or so. Hottest print since April, shouldn't matter, says one important bank. And then China, why gold and silver should re-rally. That's my term there. All right, before we do the MUFG Commodity 2025, I'll just make a comment about CPI because it's probably going to be out by the time you see this. Headline CPI is expected to rise by 0.3 in November. Core CPI is expected to rise by 0.3 month over month and 3.3 year over year. My statement here, the market and one prominent bank thinks CPI has to be super hot for the Fed to not cut 25 basis points in December now. So unless CPI is super hot, really surprising to the upside and hot, the Fed's likely going to cut. So assuming that it's not super hot, the markets should react as if there's going to be a cut. The question you want to ask yourself is, as a precious metals person, is, has the market already discounted this data point because we've had 2 or 3 days, 3 days actually, of decent behavior, decent for gold, strong for silver in the front, and weaker for silver today? And the answer to that, from a trader's point of view, is this. Nobody knows, but here's how to frame it. Anybody who buys that much before a data number, they believe that the Fed's going to cut no matter the data number. Now, when the data number comes out, if it's what's expected and gold doesn't rally and silver doesn't move initially, well, that's pretty bad. That's an implication that whoever had to buy bought before and there's no one left to buy. If, however, the data comes out moderate and the market jerks higher, well, that says that that buying that was coming in was potentially tip of the iceberg. So what we're looking at now is a market that's expecting the Fed to cut, and provided the data comes in within that normal area, then how the market reacts today will tell you how much money is left to go in gold and silver. That's always the case with stocks. Stocks are always front running Goldilocks. But with metals, that's a new phenomenon, something we should pay attention to as traders. All right. Commodities Outlook 2025. Where is that? All right. So we'll give you some bullets there. Precious metals, MUFG is bullish for gold and silver. We'll differentiate those two in a minute. Energy, they're neutral to bearish. Base metals, they're neutral to bullish. And agriculture, they're neutral. Energy is actually two-tiered. They're bearish and then bullish. So it's kind of like a time spread trade for them. Gold, to give you the summary there, gold is bullish for the reasons that they had in 2024, which were prescient, I actually think. And I'll talk about MUFG in a second for context. Silver, they're not bullish out of the gate. You may be, I may be, but they think, and this is comfortable to hear this, they think that silver gets going when base metals bottom. So when copper bottoms, you buy silver. It's not to say you short silver now. It's to say that silver's industrial side, even though China is buying it till the cows come home, is going to be weighed down by the copper weakness, which could be turning right now. So I want you to think of it this way. If I'm bearish copper and bullish gold, then I'm going to buy gold and I'm going to sell silver if I'm playing that little game there. That's what the CTAs do. And when copper bottoms, silver rockets. That's really the headline. When copper bottoms, silver rockets. You want to look at it that way. Top trades, long gold, fear and wealth dimensions offer compelling entry for our long gold call, long short oil, upside on low valuations around supply risks, downside on high spare capacity. Short natural gas, I don't agree with this, but I'm not going to fight them on it. Upcoming mega supply wave of LNG supply drive prices below lignite economics. Interesting. Okay, let's throw a couple slides up there. Look, a quick comment about MUFG. Japanese bank, biggest bank in Japan, one of the biggest, probably top three financial institutions in the world. They're not bullion banks, but I think they want to get a bigger footprint in metals. And as a result, they've been not only putting out good research, but putting out a little bit more than the bullion banks, because I think they want to capture people's imaginations and market share. In 2024, they said, I remember this very clearly. They said selective. Everything we're neutral to bearish on except gold and silver. And they were the first bank to say that. They also were the first bank to start to differentiate from the consensus of where gold and silver would be. You know, the banks kind of lag. Well, gold's up, but it'll go back down. They were the first bank, in my memory, to significantly say, no, it's going higher. They didn't come out with any fancy reasons for it. But this year, in this report, they put a little more meat on the bone of their own reasons for gold disconnecting. And, you know, most of them are what we already know. You know, physical demand is why it happened, yada, yada, yada. And believe me, Japan's buying gold too. But there is something new in there. I wouldn't say it's brand new, but they put a chart on something that I've been looking at for a while. And they are saying that gold and the bond market now have a positive correlation for parts of the year, which is like what we've been saying for a while. Gold and rates don't have a negative correlation anymore because gold and bonds no longer are modeling interest rates and opportunity cost. Now the gold bond relationship is modeling inflation and default risk. And so they have a nice little chart in there. It's called a smile chart. It's a regression to the mean, and I like that. Anyway, I'll read a little bit more. I'll read a little bit of that and throw a couple charts. Now, there are a ton of charts in the report at the bottom for premium subscribers. So we'll just give you a couple of renderings here. And I'll read a little bit while we're looking at it. So there's the first page. And let me get my slide deck a little bit better here. There's the contents. Gold, bullish. Gold's unshakable bull market remains our most constructive conviction for the second consecutive year, reinforced by a combination of fear, geopolitical hedge of first resort, and wealth, emerging market, central bank demand. Dimensions. Given gold's diverse and fluid drivers, it's the hedge for everything right now, right? Um, the precious metal has served both as a debasement hedge at times this year and in its more traditional role as a non-yielding competitor to U.S. Treasuries and money market funds. Gold is in the Goldilocks stage right now. Ultimately, gold has developed a smile profile to yields. I never heard it put this way, but yeah, it's kind of right. Wherein gold prices have risen in both periods of falling and rising yields. Ta-da! When the world's coming to an end and banks can't uh, stomach their deficits anymore, you buy gold, right? And when the world's not coming to an end and bond yields are going up because the Fed's going to ease and everyone's going to buy bonds again, you buy gold. And that is the Goldilocks scenario for gold and coming soon to silver. Now, moving on to silver, let me give you another chart there while we're doing this. Right, there's their commodities, tactical buys. I mean, there's a lot. The charts are very similar to this. There's two charts, and then there's a description, and there's a thesis at top, and there are many charts for precious metals. Not a lot on silver, but there are a lot on gold, and I'll show you a couple of them here. But there's also trades, and it's a very good report. I like it a lot. It's a breakup from the American vibe. All right, silver. Silver bullish. I'm quoting this. Silver's time to shine comes once base metals are set to find the floor in early 2025. Indeed, while silver takes its primary pricing cues from gold, its industrial demand drivers mean that silver's valuation versus gold is highly sensitive to base metals pricing. We could not have said it any better. And that manifests in price action when people say, I know about China buying all that silver, but who cares? There's plenty around. It's industrial, sold. These people don't know as much as you or we do about metals. All right. So a little bit of bottom lines. Precious metals, a little bit more rhetoric. Gold's unshakable bull market remains our most constructive conviction for the second consecutive year, reinforced by a combination of fear and wealth. Energy, neutral to bearish. I think I read that already, right? All right. Let's go to the next part. Top trades. Their top trades are long gold, fear and wealth dimensions offer compelling entry for our long gold call. Not fear and wealth preservation. That's what's going on there, right? Long, short oil upside on low valuation, Iran supply risks, downside on high spare capacity, short gas, upcoming mega supply wave of LNG. Okay, I think I did read that already. Commodities 2025 out. These are a couple of slides. Outlook and chop trade ideas. Stay selective. They were right. These guys should get more respect for commodities. They're probably getting a lot of Asian businesses, so they see some flows there. Their analysis is good. All right, so there you have the commodities and the sub-commodities and the subcomponent. They get into their own version of the, what's the word I'm looking for? Super cycle, right? And it's good. It's good because the reasons for it are definitely some things to look at. 5Ds they call it. Precious metals outlook in 2025 bullish. There at the bottom is the consensus for each metal, as well as their calls, and their calls started to diverge in 23 from the consensus and started to pull away in 2024 with the rest of the market catching up to them on the back end, with maybe UBS being another example of someone who was a firm that was smart. There's one chart, gold prices, an unshakable bull market. Okay, that's their price characteristics, and the gray area is the range they expect it to have using bands, and that's a small chart there. Central banks' net gold buying has tripled since mid-2022. Now, this chart, I can't make it bigger on this setup, can I? This chart, look, most people have been saying central banks' net gold buying has been more. No one has said tripled, number one. Number two, everyone also has said central banks' net gold buying should drop, Goldman being the strongest proponent of that sell-off, backing off. These guys are saying it doesn't really look like it's going to drop by that much. Okay, so put it in perspective. If they buy less gold than they did last year, well, they're still buying 2.5 times more gold than they did 2 years ago. So this is a far cry from being over. There's the smile. Gold has developed a smile profile to U.S. yields, signaling it is well situated to hedge Trump 2.0 uncertainties. They list those as well. U.S. real yields, month over month change in basis points versus gold prices, month over month change. So basically, what they're saying is that when real yields go up, gold goes up because people are worried about bonds in general. When real yields go down, gold goes down first, and then it goes up. That's why it's a smile. At both ends, at both extremes, gold goes up. I'm really worried about default by gold, right? I really think there's no risk of default, but there's a recession or the Fed's going to ease. Bonds rally, buy gold. So in both, the barbell of this is the smile. That's a situation there. Moving on. News and analysis, CPI preview. We just mentioned that China, why gold and silver can accelerate again. I'm running late. Founders AM, chicks for free. That's a write up by a Goldman Sachs, couple Goldman Sachs traders discussing the perception of money and distribution of wealth. Money for nothing. It was very good actually. And El Salvador's gold reserves worth up to 3 trillion. Yeah, everyone's gold reserves are worth up to 3 trillion. You should just take a loan against it instead of borrow money from the IMF. But hey, what do I know about how to run an economy? All right, moving forward. Data on deck, CPI, we know that. And there's the premium MUFG's report, and you'll be able to see that there. There it is again. Let's take a look at the markets again. It's 8:28. The numbers are going to come out in 2 minutes, so let's stay here for a second. And let's see what the initial reaction is. We'll go to the 15-minute chart, and I'm going to take a drink from a coffee cup. Happy to be sponsored by Starbucks if they're interested. All right, so here we are. Let's start with gold. Let's start with silver. All right, so there's your silver daily, right? So this is your area here we want to get through. 8 and 9, that's bearish, or put it this way, that's sideways, right? Gold does not have an 8 and 9, so gold is not overbought, so gold will drag silver higher. So gold should lead today after the number. We'll see. But gold's through its channel. There's really nothing stopping gold from going to 27.20, 8.29. I guess I'll fill up the next hour. It's like the Dick Clark New Year's Rockin' Eve. Silver. Okay, so we have both markets were strong last night during China hours, but then silver got whacked, like Sopranos whacked. All right, so there's silver. This is what happened last night, right? All right, so here we go. The numbers out in probably 10 seconds or so. Dead air. If you're doing radio, you're not supposed to have dead air, right? So WTI is up 97. Might be Middle East related. I can't believe the fact that I think Europe sold metals tells you that. All right, here we go. The data's out. Whatever the data is doesn't matter for this part of the show, but the knee-jerk reaction for silver is higher. Here, I'll do a 3-minute chart. Knee-jerk reaction for silver is higher. Knee-jerk reaction for gold is nowhere. All right, so I'll just give you a live feel for this. If gold's going nowhere and silver's rallying off the lows, well, that's probably shorts coming in, covering after the number. But both markets are vulnerable to go lower. Okay, we'll find out what the data is in a second after we go off the air. But bottom line here is in 15 minutes, you'll get a real feel for where the market's going to go. But right now, you're seeing short covering in silver and longs doing nothing in gold. So the number's probably a nothing burger. And what the market will do will come after the data is digested. So the data is a non-event. So right now, everyone's probably saying, we're going to have the Fed easing. Now let's really think about that. It's now the silver short covering is fading. It's a 3-minute chart. Yeah, it could last a little bit longer. And there's the dollar, right? The dollar started weak and then rallied. So the dollar's bounce is telling you that gold and silver have a good chance of weakening as the day goes on after the silver short covering is done. All right, I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.